Good morning, all. So we are delighted actually to today to present you that webinar, Don't Throw Performing Offices with the Bathwater, and we'll do a focus on the Paris region. So obviously the main question there is we know that the office market globally in Europe has been particularly mistreated since the COVID-19 and after that rising interest rates, but we see increasing differentiation within each sub-market. And we'll have lots of details today to present you those. First of all, so I'm today with Irène Fossé, so she's Director of Research and Strategy at AEW Europe. Hi, Irène.
Hi.
We are also with Béatrice de Quinsonas. So Béatrice is a Research Director at BPCE Solutions Immobilières. Hi, Béatrice.
Hello, everyone.
And I'm also today with Thierry, Cherel, and Roméo, Yombo, so our two experts on real estate within Natixis CIB research. So maybe as for the starting point, so we mentioned today that the office market are particularly mistreated, but we are starting to see some differentiation. So Thierry, do we see the impact of unloved offices in the investments or volumes already?
Thanks, Thibaut. Hi, everybody. So first, looking at the investment market, we are seeing a significant drop over the last years. But this is mainly driven by the macroeconomic environment with the rise in interest rates. But on your right side, you are seeing a chart which is showing you the market share of the office sector within the overall scope of Europe in the purple line and in France in the yellow line. And you are seeing that the office market has lost a lot of shares. For instance, in France, the long-term average we are seeing on this chart is about 60%. So now we are below 30%. So just I would like to ask the question to Irène about what could be the explanation of this mislove?
Sure. So of course, the real game changer for the office market is the very fast expansion of remote working since the COVID pandemic. And this combined with the end of the one desk per employee policy, which is known as flex office, has led to a decrease in demand for office space. So on the chart on the left, on the previous slide, thank you, you can see data showing the real occupancy rate in offices across Europe based on Access badge data. It shows a clear trend. The occupancy rates have not fully recovered to pre-COVID levels at 60%, down from 75% pre-COVID, which is, by the way, far from 100%. Of course, going forward, we'll see some changes over time based on the health of the labor market and employers' preference, but remote working is here to stay. In France, some of the working from home arrangements negotiated by the trade unions are expiring this year or next, and it will be very interesting to see the outcomes of this new round of negotiations. The remote working is a global phenomenon, but as you can see from the chart on the right, there are significant differences across markets. So if we look at the European markets, Paris is the market where employees spend 3.5 days on average in the office every week, compared to 2.7 in London. So many reasons explain these differences from average commuting times, commuting costs for the employee, or the structural difference between the labor markets. And you also have differences in the shares of employees working 100% remotely, which is quite low in Paris at 5% compared to 12% in London. The main consequence of remote working is the increasing bifurcation of the office market between central locations, easily accessible with public transport, and more peripheral office submarkets. So since the pandemic, we've seen prime rents in central business districts increase to record highs, while at the same time, the vacancy rate has increased in more suburban locations. Why? Because most office occupiers decided to move to more central locations to attract and retain talent, and could afford to do so by leasing less square meter on average. So on the next slide, you can see on the chart on the left, the office net absorption, which is a change in occupied stock, or in other words, it's net take-up, which has been quite weak since COVID as companies have reduced the amount of space they lease. And you can also see, so these are the purple bars, sorry, and you can see on the green bars, the stock growth, which tracks the additional buildings recently completed, like new on the market, which had increased pre-COVID as both the financing conditions and the supply-demand dynamics were positive. You can also see the red line, which shows the vacancy rates. So on average, we currently stand at 8%, and you can see it's not too far from the historic average, but it's not a historic high. So going forward, we expect new completions of offices to reduce significantly as investors, but also lenders, are no longer willing to take development and leasing risk. So for instance, in the Paris region, which is the main interest of our webinar today, the number of office space under construction decreased from 800,000 square meters at the beginning of 2020 to 94,000 square meters today. We are also seeing a pickup in the conversion of office space to other uses, although the Paris region is lagging other markets and continues to do so. But this will help reduce the vacancy rate going forward in Europe. At the same time, we expect some recovery in net absorption, mostly driven by growth in office-based employment. So we expect the vacancy rate to stabilize around 6% compared to 8% today. But this average, like if you go back to the previous slide, so hides the differences between the CBD vacancy rate at 4% and the non-CBD vacancy rate at 10%. And this is based on an average of the 10 largest European office markets. On the next slide, you can see also the differences between European markets. So on this chart, I'm showing the current vacancy rates with the blue diamonds, our forecast for the vacancy rates in the next 5 years. And the bars, the vertical bars, shows the mean and the max vacancy rates since the year 2000. So you can see really the differences across markets. Again, the bifurcation between the prime locations, so Paris CBD, London West End, compared to more peripheral submarkets such as the City or the Docklands in London and the Western Crescents and La Défense in Paris. I'm also showing here the average vacancy rate in the US, where the vacancy is closer to 20%, so much higher than in Europe. And that really helps us to understand the concerns around the office sector overall. But I think it's good to keep in mind that the US market is not always a leading market in real estate. Now I'm going to zoom in on the Paris office submarket and even on the office on some municipalities. So the chart on the left is showing you the average office rents in key Paris submarkets, rather than prime rents, which are more widely communicated, but are not as reflective of the market conditions compared to average rents. So this is another clear sign of the bifurcation of the market between inner Paris, where office rents have steadily increased post-COVID to a record high of over 1,000 euros per square meter per annum for prime and over 760 euros per square meter for average rents. In contrast, the peripheral submarkets, so the Western Crescents and the Inner Rim, have seen a lot less rental growth. And what's also very important to keep in mind is the level of incentives. So on the chart on the right, you have the incentive as percentage of headline office rents. And you can see some really impressive figures for Péri Défense and La Défense, over 30%. So this includes both the rent-free periods and also the TIs. One final slide, if we can get it. It's on the very granular location of the Paris municipalities. So you'll see it's a lot of detail for someone who's not quite familiar with the Paris region, but the more granular data, the better. Sorry. We can get the last slide.
Yeah.
Of my section.
Sorry.
Just a second. We have a technical issues, but we will solve it just right now. Sorry.
Even in the office, we can have some IT problems.
Yeah. Yeah.
Here we go.
Okay, almost.
Yeah.
Almost there.
It's coming back. That's a good point.
Okay.
And it's and the last slide. Yeah, and one more. Yes, that one. So here I'm just showing the vacancy rate in the different municipalities of Paris. So it's a lot of detail if you're not super familiar with Paris. But what it shows is that the inner Paris locations are the clear winners, but not all inner Paris locations are performing really well. And if you look beyond Paris, you can also see that places like Neuilly, like Vincennes, are also performing really well thanks to good public transport accessibility. On the other side of the chart, you can see a lot of submarkets from the northern inner rim, locations that have really benefited from the extension of the northern extension of the line, Metro Line 14, and also from the Olympics. So these are Saint-Ouen, Saint-Denis, and Clichy. But these areas have struggled to attract new office tenants, and the new developments have struggled to get leased. You also have some areas in the Péri-Défense submarket, so around La Défense, and these areas are now struggling to compete against the very affordable rental levels in the La Défense markets. But we think they are well positioned to see some conversions from office to other uses, as residential values typically per square meter are now higher than office values. But this chart is just showing the vacancy rate, which is the one variable showing the current demand and supply balance, while the scoring that will be presented in a minute will go into a lot more details. But first, I'm gonna hand over to Béatrice, who will talk about the investment markets.
Thank you so much, Irène. So I'm going to go through a few points with you this morning. So first thing is on the performance. So here we have a focus on the French market. So on the left-hand side, so you can see the performances by type of assets. So we can see that for industrial, retail, and residential, we still have a gap within the values around -5%. You can see the blue line that is apart, and we can clearly see the gap in between the value correction for offices. So we know we have a major correction on the office markets. On the right-hand side, I wanted to share with you the evolution of prime yields and of secondary yields. So as you can see, we can see a lot of red within this chart. So indeed, we have quite strong increase if we look on an annual basis, both for prime and for secondary yields. So meaning that the value are going down. But if we look on a quarterly basis, we can see that mainly for prime yields, we start to have kind of a stabilization for prime yields on some cities. So for example, for Paris. And for core, we start to see a kind of stabilization, but it will depend then on which type of asset we are looking into details. So in the next slide, here I wanted to share with you the results of a survey that we do twice a year in partnership with MSCI, and we ask investors about their intentions. So intentions for purchase and intentions for sale. So on the left-hand side, you have the intentions for purchase. And so a good point is that we can see that offices in Paris are in the first position, both for sale and for purchase. So we see we have a quite good liquidity in this market segments. If we look more precisely on suburbs, so for inner ring, outer rim, and western Crescent, La Défense, we see that in total, these three market segments represent 3% of the intention for purchases. And on the other side, for sale, these three market segments represent about 35%. So we can clearly see that we have a lot of people willing to sell and very few willing to buy. So this underlines the pressure that is going on prices on this type of offices, assets, and sub-markets. Last thing on the investment sentiment that I wanted to share with you this morning is the breakdown within the investment volumes. So here you have the evolution of the total amount. So for sure, we know it. We had a really cool down in terms of total amount. But if we go through and if we look in a more precise way by each market segment, so we can see that the investment is now really concentrated more on Paris sub-markets rather than on suburbs. On suburbs, we have around 20% of the investment volume in offices, where we have around 80% now in Paris. So this underlines the clear attraction for investment within Paris. But Roméo, should we look into the Paris region market on the binary way, Paris and suburbs?
Well, despite the recent downturn in the office market leading to a growing polarization between prime versus secondary markets, some sub-markets tends to gain from the evolving occupier needs. So the focus is now on redefining the landscape of the new office market. So what is the new scoring grid for the office market? A more granular analysis led us to examine 7 cities across 7 cities within Europe's largest and most established office markets, allowing us to discern, let's say, nuanced trends behind the polarization. As a result, we classified office submarkets into three categories: top tier, middle tier, and bottom tier. So the top, usually CBDs with the highest rent and property values, but also excellent connectivity, are poised to benefit from the polarization, no doubt about that. The middle tier, the often overlooked gray area, and the best, which includes some of the, which is between, sorry, the best and the worst submarket, which yet includes location with exceptional potential growth and performance, whose success depends on the ability to meet the occupier needs. And last but not least, the bottom, unfortunately, the losing side of the polarization, facing the highest vacancy rate, the lowest rent, and capital value, typically far from the cities and with poor amenities. So on the right side, the bottom graph show you the trend in average rate by for each tier. So you can see basically the polarization, and the top graph is a representation of the mispricing we see in the middle tier. So so we now go to show you one of the variable of our assessment, which is commute time. Indeed, shorter commutes and access to public transports, which play an important role in convincing employees, but also companies to go into this area is a key criteria. The result of our assessment for Paris region is that it clearly favors the Western Crescent and La Défense in particular, explaining our positive stance for these submarkets. But let's now go dive into a more detailed analysis and explanation of our scoring grid.
And just before me moving to the scoring grid, so just a reminder, so do not hesitate if you have any questions to use the Q&A sections and on your teams, and we will be very happy with all our experts to answer to them. So basically what you can see there is that we constructed a scoring on 10 factors actually, and one of those has been the commuting time that Roméo just presented before, on which after that we created some z-scores going from -2 to +2 for each variable. One of the factors that we can illustrate there is, if you look at the chart on the right hand side, which is quite interesting, is to see how much the supply absorption period is actually leading to lower capital values in a couple of regions in Paris, and particularly that was the case for Eastern Inner Rim, Péri-Défense, and Southern Inner Rim, for instance, which looks pretty low on that chart. On the other hand, as you can see, Paris La Défense looks well priced on that particular criteria. The other factors that we have taken into account there in order to develop our scoring grid is the trending take-up, obviously, and the trend in net absorption. And sometimes in mid-tier locations, actually, net absorption is showing already an improvement over the past 1 or 2 quarters. The incentives, which are key to the trending prime rates, but also the potential capital gains, where we actually constructed econometric models in order to explain the capital values for each sub-market of the Paris region. And it tells you a lot about potential promising market particularly. So what you can see on the chart left-hand side is the result of our scoring grid. And basically, you see without any surprise that CBD, Center-West, including CBD, the 5, 6, and 7 arrondissements of Paris, but also Neuilly-le-Valois, are the places to be in terms of the core where the risk-reward is very attractive. Having said that, again, it doesn't mean that all the other sub-locations in Paris are without any attractive potential. So Thierry is actually going to detail a bit more about those promising markets.
Yeah, thanks, Thibaut. Yeah, you are seeing that most of our value add in the report we've recently published is the fact that we are pointing out on the promising mid-tier markets. Because within the mid-tier markets, with the one which are the ones which relatively attractive risk-reward return, we think that some are really having the potential for presenting attractive valuations in front of active occupier markets. This is the case for the south of Paris, so Paris 12, 13, 14, and 15th arrondissement of Paris, and as well as La Défense. Some could have the question about La Défense, but we think that the activity and I would say the neutral net absorption makes the high vacancy rate not really a question, and especially when we are also taking into account what Roméo just mentioned, the commuting time, because we've seen that the area A hub in the north of La Défense is really the strong part of La Défense, which we think will thrive over time. We could just mention that if you go to the next slide, we could just say that over our report, we have covered 7 markets across Europe, which are part of the most important office markets in Europe. And for all of them, we have done this segmentation or this classification, sorting the different sub-markets into 3 parts. But after this, I would say, top-down approach, it could be interesting to have a deeper or a more granular view, and I could leave the floor to Béatrice for that.
Thank you, Thierry. Just a few points I wanted to share with you. So indeed, as Thierry and Thibaut and Roméo just shared with you, so we have the top-down approach. So that is to say, which asset type is outperforming others, and in a more detailed way, which sub-markets are in a way the winners sub-markets. So going through, for example, a scoring analysis. And on the other way, we have as well the bottom-up approach. So in a way, once I have chosen a dedicated sector and a dedicated market segment, the importance to look really on the asset characteristics. So how is my asset performing? So in comparison with its peers, and what is the impact of its specific characteristic, to then be able to modify to try to optimize as much as possible its value. So in the next slide, if we go a little bit, if we look in a more detailed way. So for example, we know that offices are underperforming the other asset types. So you can see this on the left-hand side on the chart. So I've put there the performance by type of assets, and then we can classify the different asset type. And on the right-hand side, if we go in a deeper way on, if we look at the breakdown by market segment, we can see we have a hierarchy in between the performance of the offices located in Paris CBD, and the more and when we go far away from the centrality of Paris, we can see that we have a less attractive performance for offices. So then on the next slide, on the bottom-up approach, so in a way the asset selection, here I wanted to emphasize the importance of all the work that is done on the asset management side. So we know we have the asset's main characteristics that we can't change. So all that is related to the specific localization. So am I far from the public transportation? And we know we have a strong impact of this of the centrality of the building. But on the other side, we have all the work and all the analysis that can be done on the, for example, on the decision whether to inject capex, whether to optimize a green value, all the work on the tenancy optimization. So this is really important as well, and all the question about what is the future asset value, also related to what could be my potential rent level, is something that needs to be taken in account. Or other examples, we know that we have tenants more and more looking at offices offering a range of services. So another topic is also the question whether to add services, of course, when the building structure can make it possible, and all the question also related to the transformation of the building destination. So mainly to transform an office building into a residential one, and we are holding a specific conference within two weeks on this specific topic. So what I wanted to say is the importance of the top-down approach, and as well on the bottom-up on the asset selection.
Thanks a lot, Béatrice, for that. And actually, just to summarize, so what we have understood today, if it was not clear, is that definitely polarization is underway in the European office market, and particularly in Paris, which means that you can't judge the fair value of a specific city in the European offices without considering actually the details of the segments. That's the first point. Second point is that it's not only about core markets and the rest of the markets, but as we have understood today with Irène, Béatrice, Roméo, and Thierry, there are many markets to distinguish, and there are promising mid-tier markets, particularly, which can be attractive from an investment point of view in the short to medium-term investments. And third point, as we have understood with Béatrice, is that it's not only about the top-down approach. We have to consider, obviously, the bottom-up, and particularly in order to do a proper asset selection. So,
yeah. We have a question. We have some questions on our Q&A section. The first one is on the impact of the new PLU. Is there any impact from this? Maybe Irène or Béatrice, you could comment this. Your mic is off, Béatrice.
Yes, sorry. Yes, thank you. Yes, indeed, the PLU is quite an issue for investors having a few assets that are concerned. We have been discussing with investors. So the sentiment that we have is that it is something that might have an impact on their strategy. We have very few investors that have decided to really transform the whole building. It's more going through minor works on the building, and it's more wait and see decision. So to change as well if we have a major change with the government and all of this. So there is a bit of uncertainty. So yeah, it's more a wait and see approach now.
Thank you, Béatrice.
Thanks, Béatrice. So maybe I think we have another question there about the conversion of offices into residential or other assets. Could it be a solution for the problem we mentioned of polarization in the office market?
I can answer that question. So it's very important. It's a key theme. We are saying that the Paris region is really lagging other European markets on that topic, mostly because of our political, regulatory and fiscal system, because you have limited incentives at the moment to convert offices into residential. You always have technical issues at the so you have to look at the building, at the shape, at the size, at the location, of course. So a lot of challenges. It's not easy, but there is clearly a trend towards more conversion. And I think the PLU is also is going to influence other municipalities outside Paris. So I think it will happen. It will take time, but there is there are some limitations, of course, some problems with on the regulation side as well, on the financial profitability of the projects. So it's going to be slow, but it will happen on a building by building case.
Yeah, I think it's a topic that is quite hot these days. We have a few examples of transformation, so it might be a solution, but even if we have a gap in value in between offices and residential, with the cost and all the capex that needs to be injected to do the transformation, in most of the case, there is a negative impact, but it might be a solution. but it's not always easy to get all the permit and the authorization to be able to transform it. In some sub market, it's barely impossible. But again, this can change.
Yeah, and it's most of the projects we're seeing, they're concentrated in the Hauts-de-Seine department, so like on the western part of Paris. This is where the economic equation makes most sense at the moment, but still very difficult. But it's always good to look at what our European neighbors have done, and we have examples of cities in the UK, in the Netherlands, where 15% of the office stock has already been converted into other uses.
We have another question on La Défense. Of course, it's raising a lot of interest. What's your vision about La Défense? Who would like to take the word first?
I'm happy to start. So it's very segmented market in itself, because you have different generations of towers. You have differences between high rises and not high rises. You have different quality of locations within La Défense based on the distance to the transport hubs. I'm quite positive about the future of La Défense because of the accessibility with public transport, which has just been improved, as you mentioned. It's very accessible. It's actually very affordable for occupiers, and you have buildings usually like a very high level of services. And on top of it, you have the largest shopping center in Europe, a lot of other uses as well. So it's definitely changing. It will have lots of challenges in refurbishing the older generation tower. So there is a real question of obsolescence here, but it will always attract occupiers, and we are actually seeing occupiers from a very wide range of industries. So it's not just finance and the public sector, it's a really wide range. And also we're seeing a lot more SMEs renting space there because they want to benefit from this attractive rental levels and the level of service.
And maybe just to continue on that, so if I mentioned the econometric models there, so if we try to price econometrically the trend in prime rents in La Défense based on the various factors that I mentioned, such as inflation, the economic trends, the trend in vacancy and the net absorptions, actually what is shown there is that around 600 euros per square meter is a fair price today globally for prime in La Défense. But interestingly, if we take into account the forecast which were presented by Irène before, assuming that vacancy rate is going to diminish slowly in the La Défense markets, and taking into account those plus the rebound we are starting to see in take-up, means that potentially we could see prime rents going up to 660 euros per square meter, which means there is a 10% increase in rents potentially in the next 2 years.
And it's a very hard market to forecast because it's the most cyclical.
Yeah.
Yeah, there's an interesting question. I would like to give my view. It's who could be the next which player will be the next winner for the coming cycle. Looking at what we just mentioned about the fact that we should be selective in picking the right district, but also having a quite comprehensive asset management strategy. Definitely the core plus and value add investors are in the best position to benefit from the coming cycle. So the question next will be who will be the financer, the lenders. Definitely we could expect the private debt funds to be active on this area. If you have any other question, we would be happy to answer you. If not, you have our contact details, and we are still available to answer your question privately.
So thanks to all for your attendance, and thanks to all our experts. So thanks Irène, Béatrice, Thierry, and Roméo for that great webinar.
Thank you very much, my fellow property researchers. Yeah.
Thank you. Thank you so much to all of you. And bye, everyone. Thank you for attending.
Bye.
Bye.